Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Monday, July 1st, 2013. Well, a change of trend back to the upside today, a candle that's made a higher high and a higher low. Previous day's trading we had a change of trend to the downside, and that occurred on an indecisive doji type candle. And it did suggest that there was a possibility of a change of trend back to the downside. Prior to that, we saw three white body candles trading up through the round number resistance around 1600, and then the market finding enough upside momentum to rally to within the cloud to change the overall big picture bias in this market to neutral by trading within the cloud. We then saw the market attempting to trade down below the cloud and finding support at the previous resistance area at 1600. Now that 1600 level has seen the buyers come back in. The market on that day's trading with that doji type candle did close up between the midpoint and the high, suggesting that buyers had control, and today we've seen that change of trend. Unfortunately, with that change of trend, we've seen the buyers lose control of this market, and we actually saw them lose commitment throughout the trading day. The buyers have not managed to close the market up within the top half of the range, and they've closed between the market has closed between the midpoint level and the low, and that suggests that the sellers have taken back control of this market, and it does suggest that there is good potential for this trend to not continue to the upside. We also have a small white body candle. Now the white body is good with regard to the trend changing to the upside, so the buyers have made net bullish progress, but it's only been a fairly small amount, so that doesn't give us a lot of confidence in the trend continuing to the upside. But we have this very large shadow on the top of this candle, and that represents very, very strong price rejection from higher levels, from up around the high around the 1626 level. Now, little wonder that there was price rejection. If we look here, we had a window opened where the market gapped down here previously, and we know with candlesticks that windows are very, very solid areas of support or resistance, and in this case we have seen the market strongly rejected from there. So that will be a very, very strong barrier to this market moving forward. Now, in terms of the Fibonacci Extension, and we're examining the relationship of this new first time frame uptrend to the previous time the market is trending up, and here today we saw the market interacting with the important 38.2% level. We saw strong price rejection from there with the sellers taking control, and this does suggest that there is good potential for a change of trend back to the downside. It certainly isn't the type of candle that we want to see the market attempting to rally on. And in terms of the Fibonacci retracement, the market has traded up through some of the important levels, through the 50%, the 61.8%, and through the 100%, and being rejected from the 100%, and that does suggest also that there is potential for a change of trend. Now, in terms of Ichimoku, we have the market trading still within the cloud, and it suggests that we have a neutral market in big picture terms. And the market is also now still trading down below the Kijun-sen, the pink line here. And by trading down below the Kijun-sen, it suggests that the market is bearish in that medium-term time frame. The market was attracted back towards that flag Kijun-sen, as we've seen many, many times. And for today's trading, we've seen the Kijun-sen hold as resistance to this market. So not only was the market rejected from the window that opened up, there was also very strong rejection from the Kijun-sen here, the pink line, and that will hold as, or has potential to hold as, resistance for tomorrow's trading as well. By the same token, the bottom of the cloud here may be a strong barrier to the market trading lower, so we do need to be aware of that. And also we have the round number 1600 level of previous support just below where the market's trading to, so there could be some very, very solid support down below. Now, in terms of the Tenkan-sen here, the market remains trading up above the Tenkan-sen, and that gives us a bullish market in the short-term time frame, so we are getting a lot of mixed signals in this market. If we look here at the Chica span, it's below the corresponding price action, so it's only confirming what we're seeing in the Kijun-sen, but failing to confirm what we're seeing with regard to the market trading within the cloud or above the Tenkan-sen. So a lot of mixed signals, and little wonder that we have this very, very strong close by resistance, and then up above the cloud very solid resistance in a range extending all the way up to 1675, but then very, very solid support down at the bottom of the cloud through to the round number 1600.